Hello, everybody. Happy Thursday and welcome to the Gold Rush. I am Sam Gatlin, an editor at All Star Charts Gold Rush, and I'm joined by my better half today, Mr. Jason Perz. And we have some funny comments in the YouTube chat here. Jerry's saying that Jason just picked me up from school. That's right. What are you gonna do about it?
I mean, I picked him up from school in Greece. I don't know. I mean,
Yeah, yeah,
or
yeah,
maybe
yeah.
Sam's picking me up. Do I look that much older than Sam anymore, guys? I mean, come on.
No, no, Jason just got a new haircut. So
We're
everybody, if
getting
you're in the
younger as we
YouTube
go,
chat,
guys.
send him some love. He's looking fly. His haircut alone took 5 years off of your age. So looking good, Jason. Keep it up. Well done. But a lot is happening in the markets right now. So we have about 15 charts to go through today. But if there's anything else you guys would like to discuss, go ahead and pop a question in the YouTube chat, and we would love to get to it later in the show. But without further ado, let's just go through the charts that we brought along today. Jean Gote, if you will, slide number two. So on Monday, we published a note to All Star Charts Gold Rush members saying, hey, this might be a good time to start selling some gold. And then, sure enough, the next day, gold had one of its worst days in decades as sellers were heading for the exit all at the same time. So we nailed the timing there, Jason. But we're not geniuses. We just follow the charts, and the charts were telling us that it was time for gold to take a breather. And the number one chart that I saw was this Bollinger Bandwidth chart on the daily. So the Bollinger Bandwidth, Bollinger Bands are two standard deviations, I believe, Jason. It's been a while since I've gone through
Yep.
the CMP curriculum, but it's two standard deviations above and below the 20 period moving average. In this case, it's 20 days. So in other words, gold was just a long, long ways from its 20 period moving average. In other words, it was overbought, um, too extended from its mean. But Jason, that doesn't mean gold is going to crash. I keep seeing people say, "Oh, I'm so short gold. I'm ready for it to crash and for gold to go back to zero." But this is a secular bull market. I think gold's going to $8,000 before the end of the cycle, and I expect gold to consolidate like it has this entire secular bull market since it broke out on March 4th of 2024. As you can see clearly on this chart, gold has not been getting oversold for almost 2 years now, and every single time it corrects, it does it through time, not price. And you can see that with these continuation patterns that I've highlighted on the chart. So I'm fully expecting gold to do the exact same thing it's done this entire time, and just turn sideways and take a breather. And that's very constructive for the long-term trend in gold because nothing, not even the shiny yellow rock, can go up in a straight line forever. It's just not sustainable. It's not how markets work.
Yeah, I agree, Sam. I think it's too many people are just on this thing where it's like, okay, this has gone up a lot. This has to end. And every time it has a pullback, they're like, good, it's ended. And most of the time we're talking about the people who, missed the move, been hating on the move since day one. Same people were hitting Sam and I up going, hey, this thing's at 2,500. How much further can it go? You never know when a trend will end, and this isn't the end of a trend. It's a pullback in the middle of a trend. I mean, look at every single trend in history. You're going to see volatility. You're going to see pullbacks. And if you look at a sector like GDX and you're like, okay, this thing hit like nearly 150% on the year, of course it's going to have a big pullback at some point. Makes perfect sense. It's still leading the year by quite a bit. XME as well is way up there.
Totally.
So
And Jason, I think it would be helpful if you talked about you are a systematic trader, investor, whatever you want to call yourself. Talk about how far your stops are from the current prices. In other words, these assets like GDX or gold or silver can correct a long ways and still be in a structural uptrend and be a long in Jason's systematic trend following portfolio. So I think that'd be really helpful if you could give some more color on that.
No, great point, Sam. So when we're looking at this, for example, look at gold. This is actually a pretty low volatility uptrend for something that's a commodity. So we would go, okay, this is a uptrend. What's the normal range of gold which would keep us in the trend? And this is where you'd put a stop. And you could say, hey, 15%, 20%, gold's lower volatility than most of the commodities. And so that's the first thing you do. So, okay, I'm going to put a trailing stop. If this thing goes up, 60% like it has this year, it's going to pull back and hit my trailing stop, which is at 17% actually currently. And then we'd also go, what's an exit signal? And you could do this a bunch of different ways. You could go, okay, what's a moving average? That once it's under that moving average, I'm out. Let's say a moving average crossover. You have a 10 and a 40, let's say. That's an easy one for short-term swing traders to make money. And so when that crosses over to the downside, you'd be out of the trade. So either you hit or for me, I use day lows. So 60-day low is when I would get out of this trade. That's still actually right around 3,500 at the moment. So that's way down there still because a huge parabolic move, you're going to have those day lows get way down there at some point. But most of the time, before things really break down, they consolidate. So most of the time, we're not just going to go straight up and then, let's say we hit 4,500 and then we go all the way down to my stop the next day. That usually doesn't happen. Most of the time it consolidates, moves sideways, and then those breakdowns really start to happen. So here we're just kind of looking at this isn't a structural bullish trend still. I think that's a way of looking at it and just keeping it objective because you got to know where you're getting out before you're getting in. It's the hardest thing to do as a trader. And it's all because when you really, I learned this from a guy, when I was first trading and I was a little bit cocky and I was like, yeah, I made this money on this trade and I'm so great. I didn't say I'm so great, but I just felt really great about it. And he was like, well, how'd you put that trade together? And I said some, news thing, some technical thing, some fundamental thing. I thought it sounded kind of smart. And he was like, you couldn't have known any of that before you got in. For example, like, distance from 200-day moving average. You're not going to know that you're going to get out there right when you get in. That's going to change over time. You got to have some sort of systematic way to get in and out of each trade. And so when this thing pulls back, I know that, hey, it's going to be just like the guy said, like, what's a repeatable process? And so repeatable process is I know the exact exit, exactly where I'm going to get out. Sam could look at it and go, okay, I'm putting on fibs when it breaks out. These are my targets. Like you got to know where you're getting out before you're getting in, because once the money's in there and the money keeps going up in your account, you're going to go, I want to get out of this thing. I want to hit the bank and run and make as much money as I can. And for example, in something like the gold miners, like I would have been out that feeling, I'd have been out at 20%. I'd have been like, okay, great. We made a great trade. And then, it went up another 100 and, another 100% since then. I'd have missed that entire move. So I think the idea here is to try to stay systematic, especially when you're in these major secular trends, and precious metals are absolutely in a major secular trend at the moment.
Hell yeah, they are, Jason. That's right. And you know what's driving that in large part is the yield curve. You've really been pounding the table, bringing this chart to our audience consistently over the past few months, saying the yield curve is coming out of a major inversion. This is the largest inversion we've seen ever, or is it like since the 1970s or back when FDR was in office? What's the story there, Jason?
This is a major inversion. Sorry if you guys can hear the dogs. My son's in town today, so he's probably walking in the house right as I'm doing a video. Things happen.
That's
Uh,
live. We're doing this live for you all,
this
so
this is
I hope you
live, real
appreciate this.
life. People are living, dying, having babies, all right here, right now. But but no, when we're looking at this chart, like this just kind of shows you as we're coming out of inversion, we're coming into a looser monetary policy. And as we get into a looser monetary policy, we're going to make a lot more money. And most of the time, that's going to show up in things like gold. In even oil likes this type of environment. Not at the moment, not currently, but it should like it at some point. So,
Jason, what do you think about how deep this inversion was? Is that something you consider? Like, does that mean the disinversion can be even more powerful, or am I overthinking it? Is it not really like that?
it can be. So if you get back to the 70s, sorry, they're getting even louder. So if you get back to the 70s, though, yes, it can be. So the 70s were a very deep inversion period. And so now we're in another deep inversion period, and we see gold moving the same way, which makes a lot of sense.
Interesting. Yeah. And, we've been talking about this uptrend in gold. It's close to our target at 4,500. It's been a hell of an uptrend, but not a lot of people are talking about just the relative strength of gold and how it's making new multi-decade highs versus the most important stock market index in the entire world, the Dow Jones Industrial Average. Papa Dow is what I like to call it. But, even if gold corrects here, um, this structural reversal relative to stocks is still valid, and it needs to, gold has to go to like $3,000 or $3,500 for this trend reversal to be invalidated. So, for me, I think gold is going to outperform stocks at an index level for, maybe a few years, maybe like a decade, because that's what we've seen historically. Is gold doesn't just outperform stocks for a few years. This is a major long-term cycle that we're talking about here. So, it's easy to get emotional with the day-to-day swings. Gold just had its worst day in a long time earlier this week. But focus on the long term. Zoom out on your charts. Gold is dramatically outperforming stocks. This is a big deal.
And it's going to continue. And I think that's the hardest thing for people to grasp here is like, how long can this really go on? And once again, it's a who knows? Like that's how trading works. Like you can put the probabilities on your side and you make your best guess and you put your money into whatever the signal is. And so for now, it's stay long gold. Gold is doing really well. It's outperforming stocks. It's outperforming bonds. It's outperforming most of the commodity sector. I mean, we could go through chart after chart after chart showing you that. But really, it's like it's in a solid uptrend. It's making money. The relative strength's there. As much as people want to look at what's next, sometimes you have to look at what's now, and gold is still now.
Totally. That's well said, Jason. Um, yeah, man. Gold is outperforming everything. Bonds might be kind of a weak denominator there, but yeah, gold has been making new all-time highs
The
relative
worst
to
one I
bonds.
could have named. Yes.
Yeah, yeah, you can denominate gold in Japanese yens, whatever it is. Gold is outperforming. So yeah, I don't think that's going to change anytime soon, and we need to um, keep in mind that just an uptrend by definition is a series of higher highs and higher lows. So, let gold correct here. Let it make that higher low. And that's exactly what I think is going to happen here. Um, and let's shift gears. We've been talking about gold here, but how can we not talk about silver, Jason? You brought along this chart of silver. This shows the 2011 peak, but you can zoom out even further and see that this base in silver goes back to 1980. So it's a 45-year base that silver's breaking out of. And look at that relative trend versus gold. Silver's hanging out at new multi-decade lows relative to gold. So, man, I mean, this seeing that 45-year base in silver, just in absolute terms, makes me really bullish. But when I see something like this, where silver is breaking out of a 45-year base as it's at multi-decade lows relative to gold, man, the sky really is the limit for silver. Like, I think silver's going to 73. That's my first target, but man, that's my first target of many. I think silver could easily get into the hundreds.
It's going to be the most interesting thing in this cycle, which is my biggest prediction of this cycle is that we start to get to these new levels and we don't see those old ones ever again. Meaning something like silver gets out of $50 and never looks back. Then we got something like coffee gets over its levels and never looks back. Same with copper's been in a range for many years. It's going to get out of that at some point and never look back. And I think that's going to kind of be the continuation of the commodity cycle currently at the moment. We saw that huge move that happened all the way back in 2020 through 2022. and then it kind of stalled out, and everybody goes, okay, it's the end of the commodity cycle. I think we definitely have more to go. And I think silver is just one of the ones that we're starting to see break out of that massive range and probably not look back at some point. Right now, it's there's more to be said at the moment, which is we're above that major resistance level. We're consolidating around that zone. As long as we're consolidating there, I mean, Sam and I talked about this the other week. If we can consolidate around that zone, we will probably make really good money. Meaning, if we're consolidating around 50 and we can get back into that uptrend at some point, that's going to lead to Sam's target of 73, possibly to the next target, getting over 100 at some point. So I do think that's all going to happen. I just think it's be patient here. That's a major resistance level. It makes perfect sense that this thing would be volatile. Not to mention it's silver, like we talked about earlier with gold. Gold is one of the lowest volatility assets in the commodity space. Silver trades like a normal commodity. It's very volatile. You can have 5 to 10% up days. You can have 5 to 10% down days. So understand the volatility of each product you're trading, and you'll make a lot more money than basically everybody else out there.
And Jason, what do you think about JC buying silver coins at a conference in Las Vegas? This guy, for those of you that are not familiar, JC is not somebody that stashes gold and silver bullion under his bed. Like, he's never done that before. And right as silver is testing this major resistance level that goes back to 1980, JC decides to buy some silver coins. So, what do you think about that? Does that not matter at all? Or is there something there, Jason? Is that speaking to the times that we're in?
Yeah, I think there's something there. I think we're looking at the times where, everybody's kind of selling it now. The big sellers are out at conventions, wherever, trying to sell this thing. But at the same time, I don't think that's going to really play into the hands of sentiment for gold and silver at the moment. I don't think it's going to destroy that trade. I think that trade will continue to the upside. We're not seeing crazy sentiment in the United States yet. If we saw that crazy sentiment in the United States, I would go, okay, maybe now we're getting a little bit frothy. But at the moment, it's like I'm talking to people who have gold stores. They're not saying anything that's out of the ordinary. We're not seeing lines at the door. We're not seeing people, stealing someone's ring to run to the gold store to try to sell it. I mean, these are things that normally happen during crazy gold manias. I'm not seeing that yet. So I think that we have a lot more upside here. I think we just have to be patient.
Yeah, we have some comments in the chat saying this is the the Silver Rush show. Next time silver makes a new all-time high, Jason, we'll retitle the name of this show.
If we
Silver
retitle it, I
Rush.
feel like that's gonna jinx it.
Yeah, that's a fair point. Yeah. Um, JJ makes an interesting comment in the chat here. So we were showing this base in silver that goes back to 2011, and he's asking. Why aren't we expecting a handle to form on this chart? And while that's certainly possible, if you zoom out to 1980, you can see that this is the handle of a much bigger cup. So we kind of already have the structure in place to break out here. But that doesn't mean that needs to happen. It could certainly correct here, like you suggest.
I think it's
But
also wishful thinking. Us as
yeah,
traders, we always want to like think like there's this possibility of this thing that's going to happen in the future and so on. And really, it's like you weigh out the probabilities, the scenarios, and that's the best you can do. But Sam is absolutely right. There is already a massive cup and handle here. Make sure to go to the 70s. Sam has highlighted that chart a million times. I put money if you go to his page, you will see that chart if you just scroll through there. Massive cup and handle breaking out as we speak. Very bullish.
totally. Yes. Let's talk about bonds, Jason. You are out here making bonds sexy again. Investors have lost an appreciation for bonds, right as they're starting to turn the corner. The long end of the curve is the worst possible place you can be in bonds. Like something like the TLT, the 20 plus year T bond ETF, it's still hanging out near all time lows for the TLT. But something like SHI, the 1 to 3 year T-bond ETF, looks a lot more constructive. This is like a chart that we've been buying the entire cycle here. This is a textbook bearish to bullish reversal pattern. Granted, we haven't seen that decisive upside resolution, but man, I have a hard time not allocating some of my portfolio to something like SHI, Jason.
Yeah, for me, it's been the same trade that's been on since basically the Fed started cutting rates. I am long the short end of the curve, meaning things like shy. Not personally shy myself. I'm in the future space, but then also I'm still short the long part of the curve, which is TLT or 30-year bonds, ZB, for example, or ZT or ZN. Sorry, ZN. So if you're looking at those, you're seeing that they all look very similar to TLT, which is this is kind of stuck. It's not really moving the way you would think. Like everybody thought the Fed would cut rates and bonds would all rally and it'd be the end of the commodity cycle. And really, these are under a lot of pressure. The bull steepener is alive and well. That's something that you have to really think about. The bull steepener is alive and well, meaning the yield curve is going to continue to move higher, which is very bullish for a lot of the trades we're in. Most of these commodity sectors, these cyclicals that we're trading, they're going to do well. Industrials are going to do well. Sam had a chart on that about the small cap industrial sector. Like these are all going to do well in this type of environment. So I would stay bullish on what we're doing here, and start to be open to the fact that maybe the shy is going to possibly start to stall out a little bit. And I think TLT will possibly roll over. And that's probably the thing you want to look for to get very bullish on energy. But however, if TLT starts to catch up to shy, that would make me go, okay, I really want to stay away from the energy trade for now. At the moment, energy is holding up pretty well compared to the bond sector, and that's kind of surprising at the moment. So I think it's kind of telling us that, hey, we are still seeing a lot of pressure on the 30-year bonds.
Totally. And this is the chart you were just referring to here that just shows that long-term positive correlation between crude oil and the long end of the curve. Energy bulls want to see higher yields. I don't think that's a want. I think that's a need. Um, so, maybe the market has been sniffing out a breakdown in the 30-year, something like the TLT catching up to the shy, or maybe, crude oil's wrong and the long end of the curve is going to make new cycle highs and crude oil needs to catch up. I don't know. It's a big question mark, and I don't think it's something we have an answer to today. I see a lot of chatter in the YouTube chat today about crude oil, and yeah, today's stick is really nice, and I don't think crude oil is going to just break down and crash from here. I think there is a lack of downside momentum for now. So I think the bears, if they want to resolve the stop, they need to make a big move, and we haven't seen that yet. So I'm fully expecting this former support to continue to hold. But that doesn't mean I want to be heavily involved in the energy trade right now. It's just really, really messy. And whenever there is a decisive resolution, I don't think it's going to be a short-lived trade. I think it's going to be another massive move, similar to what we saw post-COVID. One of the greatest energy bull markets of all time. If the XLE breaks out of this base that goes back to the great financial crisis, I don't think it's going to hit just one Fibonacci extension level or two. I think it's going to hit numerous Fibonacci extension levels, and it'll be a secular uptrend for energy. So I don't see the need in front running that.
Yeah, no, I completely agree. But yeah, it's just the environment we're in. It makes a lot of sense to kind of pay attention to this. If we start to see yields really break down on the long end of the curve, I think oil's going to stay under pressure.
Totally. People want to hear about the dollar, Jason. We brought along some dollar charts. Let's see, right here. So You love to use the yield curve, don't you?
I
That's
love
pretty
the
cool.
yield curve. Yeah. Well, because it's the best intermarket indicator, really, you're
Yeah,
going to be able to use for just about everything. You can kind
yeah.
of understand what the liquidity is going into the market or out of the market, and see what's going to happen with the dollar, see where you should be positioned. Like this chart is a really good example of that. You know, you see the dollar in these, or sorry, the yield curve in these downtrends. That's called a bear tightener. So we're not starting to get tighter in the yield curve. We're starting to move down, and that starts to put a lot of pressure on the dollar to move to the upside. That means liquidity is tight. If liquidity is tight, that means there's less dollars out there being circulated. So if less dollars are being circulated, now we're going to have less supply, meaning the dollar gets stronger. So the dollar continue to get stronger in all those environments. Now we're in an environment where the dollar most likely is going to get weaker. It happened after 2020 for a little bit, and then it changed very dramatically into the Russia-Ukraine crisis. And now today we're kind of in that same scenario where we're coming out of this, out of that bear flattener environment. Actually, is the word bear flattener into a bull steepener environment. And so now that we're going it back into a bull steepener, the dollar is probably going to continue to get weaker. I'm sure somebody's bringing up, the dollar has bounced or whatever. I look, this is in a very bad downtrend at the moment. Is it bouncing? Is it going to bounce? Can I predict the bounces? Yes, I'll tell you it's going to bounce. Positioning is getting a little bit too bearish. And so we're going to see bounces, but I think they're just going to continue to be lower highs in the dollar and will probably continue downward for quite some time. And that's going to be good for a lot of our trades in the precious metal space and the commodity space and a lot of the stocks we're in, the aluminum space, the steel space, the copper space. I could go on, and it should give a
Weak
boost
dollars
to.
are what really drive commodity super cycles, right,
Yes.
Jason?
Yes, exactly. Well said. And that's what we're looking for, and that's why we're always bringing up the dollar. That's probably why people are always confused when we don't bring up the dollar because I bring it up so much. I always want to talk about the damn dollar. But it's because it's the most significant thing to understand what liquidity is doing in the market and to understand how we should be positioned,
Totally.
especially here at the gold rush.
Yes, sir. So this next chart, Jason, speaks to what we were just talking about, how a weak dollar drives commodity super cycles, and that's exactly what we see here. So talk to me about this chart.
Yeah, when we're looking at this, the reason why I bring this up a lot is because I get the question probably once a week. Hey, the is the dollar going to continue down and can oil move up in that environment? And the answer is absolutely yes. I don't know if the dollar will continue down for 100% certain, but can tell you that the dollar and oil moving together for long periods of time is not going to be very sustainable. Most of the time, that's a very inverse correlation. And sometimes they get tight, which happens. It happened, if you go back to the 2000s, it happened then. It's happened into the 90s. It's going to happen probably over and over again once in a while, just like every correlation. But that's the most important thing you have to know about intermarket analysis is that correlations change. And if correlations are going to change over time, you want to pay attention to them when they do change. And so we were in a very strong environment of a strong correlation between oil and the dollar. Now we're moving the opposite direction. Now it's probably going to be the dollar is going to continue lower. And as you see that movement, you probably can start to bet that oil should continue higher at some point whenever it gets out of its nasty downtrend and news driven cycles that it's been in for a while. Sam and I have been preaching patience on the energy sector. We're not putting a bunch of trades in there. We're not doing anything with it. We are paying attention to it because it is usually the next thing that moves. I keep saying this, but I'll say it one more time, which is in a cycle where the gold miners are moving, the copper miners are moving, lithium miners are moving, uranium miners are moving, coal stocks are moving. I could go on. When all of these are moving, I don't think that this will be the one time that the energy sector doesn't move with it. So, but be patient here. It's not saying that we want to see it show up in the price action. We need a catalyst to enter the trade, some sort of a breakout. For me, it's oil above 80. And then XLE above 101.
Totally, yeah. Like energy above 80, then we can, or crude oil above 80, I should say. Then we can start talking about $200 crude oil. People have been talking about that for a long time. And it's environments like this when you see crazy moves in crude oil, like when gold miners go up 150% in a year. Like that's the kind of environment you see stuff like that. So yeah, I would be shocked if we didn't see a big move in energy, but it's just not there today. So um, move on, I guess. But what is moving is coffee futures, Jason. Nobody's talking about coffee futures, but man, this is one of the best bases in the entire market. We were talking earlier about how silver's base goes back to 1980. Coffee beats that by 3 years. Coffee peaked back in 1977, and it chopped around that peak. Last year and earlier this year, and now here it is pushing new all-time highs in the coffee futures. So I'm looking for a breakout here above 430 in the coffee futures, looking at 524 is the first target. But man, I have to say, coffee looks as good as anything in the entire commodity space. So if you're a futures trader, I don't know how you can possibly not have coffee in your portfolio because this is one of the biggest bases in the entire market. And how I learned it is the bigger the base, the higher its base. And you can see from this trend line I drew, coffee's been working on a long-term parabolic uptrend since the early 2000s. So a breakout above that 1977 peak is what I've been looking for to really accelerate that uptrend.
Yeah, and I think this is a great chart that really shows it. There's some I think it was Brian in the chat. He mentioned he's looking at silver. He's saying it's only 25 years. I don't know what charting software you're using, but some of the software doesn't go back as far. You need to go all the way back to the 70s. So it's the 1980 peak in silver, and then it's the 2011 peak in silver, and now we're just breaking out today. So you have to go back pretty far. It's a 50-year pattern. Very similar to this one, another 50-year over 50-year pattern, actually. So we're looking at these massive moves in all of these sectors, or sorry, all these different commodities. And what I think is that we're probably going to end up not looking back to, let's say, 300. We probably don't see 300 for a while in coffee at some point. At some point, when silver figures out whether it's going to break out and not look back or not, we're probably going to look at the same thing where that thing just breaks out and never looks back at 50 at some point. So we really want to see strength here. If this thing can continue, let's say we get to 524, I think that thesis is going to hold up. So I think inflation is really coming down the pipe. I think people have to pay attention to that right now. I think if we're going to lower rates, if we're in a weak dollar environment, it's all just pointing to higher inflation at some point. So keep paying attention to that. We teach you how to hedge your money. So we will make money during those times, even when people are losing money. And that's what we do here at Gold Rush.
Totally, yeah. So we cover everything in fixed income, commodities, and currencies every single week at All Star Charts Gold Rush. So every Monday you'll get a precious metals note. Every Friday you'll get a commodities note. Um, Jason, do you have a set day you publish your bond report? I think you just put that
Thursdays.
out today.
Yep,
Thursday?
Thursdays. Yep.
Every Thursday is bonds, and then Rick is putting out currencies every single week as well. And you can get all of our trade ideas in our proprietary rangefinder platform that just tracks all of the trade ideas. So it's really, really easy for you to keep track of what we're doing at All Star Charts Gold Rush. It's only $12.99 a year, and you can get a 30-day money-back guarantee. So there's absolutely no risk in joining us and seeing what we're doing at All Star Charts Gold Rush. So if you're interested, check out the link in the YouTube description and make sure you give this video a like and subscribe to our channel before you jump. But I really appreciate everybody being here today for another episode of Gold Rush with myself and Mr. Jason Perz. We'll be here again, same time, same place next week, maybe with a special guest. We'll find out, and we'll post it on our Twitter accounts
That
if,
is
if
in the
that's the
plans.
case.
So that's
It
in the
is
plans. Hopefully
okay.
Dimitri's good. He's got a great report that he's putting out, so he wants to come on, share it all with us. I think it'll be great. It's more of a he's more of a geopolitical analyst, but I know a lot of you guys have been asking for a little bit more about that. So he's the perfect person to bring on. Excited to have Dimitri.
Totally. I
He
really
knows it
look
better
forward to
than
that.
anybody else.
Yeah, Dimitri's awesome. So, your life has gone horribly, horribly wrong if you have not marked your calendar for next Thursday to be here with Jason and myself and Mr. Dimitri for another great episode of the Gold Rush. So we'll catch you then. Stay tuned to Stock Market Media. We have a bunch of new shows coming down the pipe here for you. So an exciting time to be at Stock Market Media. I hope you all are enjoying the content we're putting out there. And if you will be so kind as to like this video before you jump, we'd greatly appreciate that. But until next time, stay safe out there, everybody, and try to make some money.
See you later,
Adios.
guys.